So CPI this morning did come out lower than expected, well, as expected. So it did come out as 3.4%. Previous was 3.5. Like I said yesterday, this is actually like very, very good for the markets because it's showing inflation is slowing down naturally. So obviously we're not dropping because interest rates are being raised anymore. It's actually dropping because people are spending less. So I'll just give you guys a quick breakdown of what the CPI report is saying. So the consumer price index of all urban consumers increased 0.3% in April. All right, and that's after rising 0.4% in March. Okay, and then the year-to-year report was 3.4%. Okay, if we have a look at the actual breakdown, this number calculates the change from year to year. All right, so from April of 2023 to the April of 2024 right now. These numbers are all of the monthly changes. So you can see from October to November, there was a change of 0.1. All right, so in October, it rose by 0.1. In November, it rose by 0.2. Okay, so those are just like your monthly changes. This last number is the year over year report. Okay, so all items would be your CPI report. As you can see, it's 3.4, and that's calculating all of these items, or in all of these products. This number right here, which is 3.6, that's your core CPI. Okay, core CPI calculates all items besides food and energy. And the reason why that is because the Federal Reserve can't affect the food and energy sector. They can only affect the core CPI products. So they can only affect this half of this chart here. The Federal Reserve can't actually control food or energy. That's just something out of their jurisdiction. So that's why that number is 3.6 and that number is 3.4. So it's just giving you a breakdown of the change in price of these goods and services. So you can read along the list. As again, like I mentioned, you have food, energy services, commodities, vehicles, and then transportation services, right? And you can see the biggest changes or the biggest jumps in these products would be our services less energy services, right? So we had a jump by 5.3, 5.5, 11.2. That's our biggest outlier out of these, right? 2.7. And then we did have some kind of a decrease. I believe, yeah, it was here in our commodity sector where it was negative 1.3, negative 0.4, negative 6.9. Okay, so that's what kind of caused inflation to come down a bit is our commodity sector. So that's one way on how you can just break down the CPI reports and see what exactly affected inflation. So again, inflation is just the change in price of goods and services. And what goods and services are we talking about in specific? It's these ones. Again, food, energy, again, commodities, shelter, new vehicles. And again, you can just read down the list and see the different changes. So remember, this is just the month-to-month changes. So from October to November, November, December, and so on and so forth. And then this last number is the year-over-year change, right? So because we are calculating the month of April, since we're in the month of May, you're always going to be calculating the month before. Because again, you need the whole month to basically expire to get that data's worth of the month. Obviously, can't calculate the month of May when we're still in the middle of May, right? So it's always going to be calculating the month prior. So that's why we're calculating the month of April. And the monthly change was by 0.3%. And you can see the change from March was 0.4%. So that's what this is saying up here. So the consumer price index for all urban consumers increased 0.3% in April, right? After rising 0.4 in March. So in March, right, the month-to-month report or the month-over-month report was 0.4, right? And then now this month was 0.3, right? So it's showing inflation is coming down month to month as well as year over year. So year over year for March of 2024 was 3.5, right? That's what our inflation number was at. The inflation report for this year, which is the year of April 2024, was 3.4. So again, it shows a decrease by 0.1%, which is good. As I mentioned yesterday, the Federal Reserve paused interest rates last Fed meeting on, I believe, again, it was May 1st, right? So again, because they paused interest rates and inflation did come down, shows that that the Federal Reserve doesn't need to be aggressive with interest rates anymore. So cuts are looking more likely, which is good, which is very, very good for the markets. That's why we saw a significant upside today.